Okay. Recording. Okay, get the briefing and see what that magic number was. Are the earnings? This is interesting. This is a good report. Private 180, 102. Mixed. Sort of a mixed bag here. The end result is, as we look at it here, 1 second. So that news is out at 8:30. The initial response. Here's the 8:30. I think this is it right here. 8:30. 8:30 right here. So you get a sort of very typical here. Again, here's the 8:30 minute that it hit. These are 2-minute candles, but you get that quick pop and drop back to even. Net. They're not concerned about the jobs report here is not going to be a driver for the day. It still will come down to Mr. Powell, as I suggested in the morning email. Again, because that jobs report does seem to have mixed feelings to it. We'll see what they talk about here a little later. 1 second. One thing that is interesting, and I've been saying it for 2 days, you know, the whole notion of, I was fearing that Trump would double down, and sure enough, he doubled down in a big way. So the market's been caught by surprise here 2 times, 2 days in a row. All right, they're probably not going to fall for 3. So I think what we want to do here is sell into strength and hold on into a weakening market. One pretty interesting thing, but serious thing nonetheless here. I read an article last night that I can't find the article now that I wanted to show it to you guys, but the point was that here on the S&P, 1 second, chart. Okay. In 2018, right, we've had 26 days of where the market had a move greater than 1%. 26 times greater than 1%, right? In reversing the moves, right? They were trying to, I think in the article they were pointing out that hasn't been done forever. All right, so it is an understatement to think in terms that, you know, you have a volatile market. You have an incredibly volatile market. Just again, to put things in perspective, if you're, I don't know if I can find this one now. Hold on. Okay, this guy here, this is basically the founder of mutual funds, right? Vogel here, big time. He's not only the founder of Vanguard Group, I mean, he's basically started mutual funds the way we know them today, right? So the comment here, never seen this market in his career, all right? Well, again, he's making that comment because it's a serious thing what's going on here. The market has reached that that plateau, it seems anyway. And what was bothersome today too, I noticed, Trump himself here at the point here, see if I can find that. Trump was being interviewed this morning and made the comment that, yeah, the market's going to feel some pain. That's what he said. That was the bottom line. Market's going to feel some pain, but, you know, we'll come out better for it on the other end, right? Well, that certainly remains to be seen. Again, I can't. I don't know if it'll pop up this way. Trump. Whoops. Trump. Keyword Trump. And again, what's disturbing here is that the market is reacting to things that are basically non-economic. I mean, they're economic in a major sense, in the big picture type of thing here. But one second here. Again, I can't find the specific quote, but the point was that, you know, even Trump himself knows that this market's going lower. We've got the 1 o'clock news coming out, or not the news, but the speech from Mr. Powell, right? And that will move markets, all right? So you think the market's a little volatile now. He will more than likely say things are going to, the Fed is going to keep on track, right? Well, what does that mean? It means they're going to continue raising interest rates at least 3 times this year. That's what the market already knows that, right? But here, he is expected to reiterate that at 1:30 this afternoon. And if he does, just that way, reiterates it on top of everything else that we know here, it's going to be pretty hard to get to get some upside, I would think anyway. So I would be playing this thing shorting into rallies. Let's look at again, now it depends on your perspective. Keep that in mind here. 1 second, here's the S&P. Back up here a bit. I don't know about you, but the charts I'm looking at now, we've already proven here. We're back. 1 second here. Take that one back. Hold on. Anytime. Okay. So here's the Dow, right? And if you know your patterns, all right, how many of you would agree we're probably looking here at a descending triangle, okay? And so clearly here, yesterday we had a shot at, or today, we would have been expecting some follow through by the bulls today, all right? Obviously, we're not going to get that. The pre-market is at, in the Dow anyway, the Dow pre-market, 1 second, 24,276, 24,276, 24,276. I guess in the scheme of things, that's not bad. I mean, it could be worse here. If we're sitting here, 24,276, somewhere in here. One second. 24,276, it said. Right there. All right, so we're going to open up there. And so what's the first observation we make at this point? We have a high. We have a lower high. We have a lower high. We have a lower high. Today, we're going to have a lower high. I don't know what it's going to take because that's where we're opening here. Yeah, can we push higher from here? I don't know. Don't think so. But in the scheme of things, we want to trade with the trend, all right? You hear me say that over and over and over again, all right? Look, the longer the trend, this is time, right? The stronger the trend. The trend is down, right? You want to trade with the trend, short into rallies. That's, that's one way you're going to play it. Now, on the other hand, you've got individual stocks. If you're playing individual stocks, and here again, my comments here relative to the Dow is one thing. It applies to the S&P. It applies to NASDAQ, I think. I mean, downtrend is downtrend. Could we, keeping in mind, the only thing, I think anyway, that could save us here is we get a headline that says, okay, all of this trade war nonsense is going to stop, both sides back away, and that would be one thing. That would, we certainly would get a rally out of that, keeping in mind our economic domestically. The action is still strong. That's what the jobs report, theoretically, anyway, was suggesting here this morning again. So, but let me see here too. I just want to see. And the reason I point this guy out, again, here's the guy, basically invented mutual funds, and he's telling you what any of us who've been around for a while know, that you've got a market here that I just pointed out has had 26 days of 1% or greater moves in the market, all right? And we haven't had that in the past umpteen years. So you talk about market volatility at a market top. This is beyond, we are getting like beyond market top, normal market topping activity. This is, when you get volatility up here at the market top and it can't get back above, it can't make new highs, all right? Yeah, that's what the market looks for. It's the topping process, and the next thing you know, the downslide starts. Well, again, here we've had just extreme volatility. This is not normal, and everybody knows it's not normal. So, what can we do to get back to these days? Well, maybe the Fed will have to make a bold statement like, we probably won't raise rates 3 times this year. Could he say that at 1:30? Nobody expects it. Should he say it at 1:30? Probably not. In other words, the market has yet to go down far enough to scare the Fed. If the market drops another 10% from here, we'll be in a bear market, I think. Let's see, here's the S&P. We are, as of, this was at 11%, 12% down to this level. So 20%, we'd have to be down here. If the market got down here, this 2300 level, that's almost a 20% drop. That would be considered a bear market, and I suspect if that were to happen, the Fed would not raise rates, obviously. Okay, so maybe that's what we need. Maybe we need a strong flush down to the downside and scare the hell out of the Fed, if not Trump, and all of a sudden maybe we get back to, I don't know what normal is anymore, to be honest with you. It just comes back down to follow your charts. I mean, there's no other way to get around this. You're either going to get embroiled in trying to keep up with headlines, which you shouldn't be doing anyway, right? And as I'm fond of saying, you've heard me say it almost every single day, we need a sense of grounding, okay? So this is where Pat O'Hare comes in, and hopefully here will ground me, because I'm getting upset at this market. So let's see what it has to say here, page 1. Remember, the appeal to this guy is his ability to relate what's important out there, what's driving, again, without trying to make it bullish or bearish. 1 second here, so we could read this. Okay. Again, we know this. Of course, that happens, after the market's closed. I mean, one thing you can count on the government to do, it's always making an announcement after the market's closed. It's a strong argument that why we should have 24/7 market trading. Okay, but that's not the game. Second, mixed bag on the jobs report. And this was a surprise, although again, they did not expect as strong a number as last month. All right, they knew they were going to get a weaker number this month. Again, market already knew that. And as I just pointed out earlier, here's that 8:30 reaction, which is to say no reaction. That's basically it right here. So the jobs report is not going to be a driver today. It's already priced in. All right. We can look inside, we won't do this now, but we can find out, we can look inside the report and see which industries were hiring, which industries were laying off. That does help you to try to get a feel for which industries are growing, all right? So maybe it should be financials, maybe it should be energy, whatever it may be, and then maybe you've got healthcare falling off or whatever. But that's why you look at some of the details, and they'll come out, you'll see articles, they'll be writing about it all day. S&P currently down 20, blah, 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 blah. Well, look, I'll drink to this. I mean, it is what it is. And what it is it's unprecedented in terms of how many things are hitting this market at the same time, and yet it does keep bouncing back. And on the one, that speaks to the strength of the economy. That's why Mr. Powell's talk this afternoon is going to be so important. If the economy is so strong, right, will they continue to raise rates? And here's the conundrum. The trade war is expected to slow down the economy. So if you were Mr. Powell, what would you say? Would you just say, well, I think we'll wait to see how the trade war goes? And if it does slow down, then maybe we won't raise rates. I mean, look, it's a problem. And because of all those problems, unless you've got a hot upward moving stock, I think you want to stay on the short side of things. Or at least, let me put it that way, another way. You will do hopefully what the market is telling you to do, all right? And hopefully, if you're tracking the market and you want to trade with the trend, you're appreciating the fact that the trend is down, and therefore that's pretty much the way to trade. There's another way to do it, and the answer there is do nothing, right? You can sit on your hands for another week if you have to, but keeping in mind that the name of the game here is preservation of capital. It is not, the name of the game is not taking a flyer because you got a quote unquote feeling about that, all right? Feelings don't work in this market. You can have all the feelings you want that this thing's going to roll one way or the other, right? That's not quite the way it goes. Look, here's a pivot point here. This line here, that's a pivot point, and you can see here it tried to push higher, but this 26.46 level here is going to be a resistance on the way up. You'll know the market is seriously wanting to sell off here again if we can break the overnight lows. If we break the overnight lows, how ugly could it get? Again, we are now looking at the S&P futures. If we break those overnight lows, hold on. Again, earlier this morning, this entire candle was red, all right? And so you could see here, again, they pushed back up. 1 second. They did manage to push up a bit from those lows. Here's the lows. These are 1 minute candles. That's a little extreme. You know, unless you're trading futures, you wouldn't be trading using 1 minute charts. But still, you get a feel for how aggressive they are on the upside or downside. So I'll still track it a bit here. This is interesting. This is, it's not a precise double top, but it is a double top. And so at the open here, I suspect, let's see, 2638, at the open, we would play it like we normally would, and let's use the SPY in this case. So again, when the market opens here, 911, two 6.3, 261. So we'll make a note of the overnight lows here. And this is the overnight low from last night. This is the morning session overnight. And the path of least, not least resistance, but if you want to keep your sanity here, you basically stand aside, right? And you let it play out, and you let them fight it out, and then whichever side takes the lead at roughly 10:30, 10 o'clock, assuming there's no news at 10 o'clock, I suspect the market's just going to be a little nutsy between now and literally 1:30 until Powell speaks. 1 second. Let's see if we can get a grip on that. What are they doing with, you can see the opposite world here, the opposite world of yesterday's world. Look, dollar down. Why is the dollar down? Well, again, the jobs report was mixed, all right? So what are they doing? They're buying bonds. If they're buying bonds, they're sure as hell not buying stocks. They're selling stocks. Okay? They're pushing interest rates down, right? In the end, by the end of the day, maybe if they pushed rates down lower enough, all of a sudden the banks might be, the banks are not going to like interest rates going down, so the banks more than likely here are also going to push this market down. And it is literally the opposite of what we saw, whatever it was there 2 or 3 days ago, when I was pointing out in the pre-market action or this time of the day, and I was saying, look, remember the day the market dropped, we opened down 503 points, right? And I was pointing out, look, if there was panic, they'd be buying bonds, but they're not buying bonds, they're selling bonds. That was the point, the comment I made back then 3 days ago on that 500-point drop. So what are they doing today? They are buying. This, to me, again, here is confirming, yeah, they're bothered by this. Something else to consider. Let's look. Let's look at gold. Gold. Dollar down would normally mean gold up. Let's see how far up gold did go here today. Anything? I'm not getting that sense of panic or anything, but what I am getting is that sense of um, they truly don't know what to do. Look at gold, for example, 1326, 1332. You talk about a high and low range. One second. Here's the VIX. Interestingly enough, this is interesting, very interesting, assuming this is correct. All things considered, let's see, that's the cash VIX. Let's look at the VIX futures. VIX futures. Okay. So, interesting that the VIX futures are not flying higher, but they're not. VIX. I'm sort of getting that feeling that the market, the lows are probably in. I mean, we should have a retest of the, I would think anyway, the overnight lows. But the market now is squarely going to focus on Powell. One second. Another thing that you can do here too, look, if you're not inclined to play on a day like this, what you do have to do though is go back through your portfolio, and so you might do something like this. One second, and you know the charts that you've been watching. I mean, hopefully you've got you maintain a watch list, right? And that watch list, again, has to be a watch list that is manageable. You know, you don't want 150 stocks in your watch list. I carry more than the normal size watch list just so I could share with you various charts. But at this point, let's just look quickly. What are they doing to the players? So Apple. So what I'm saying here is, as the day develops, and I suspect nothing, absolutely nothing, will be resolved today relative to that the trade rhetoric. Mr. Powell, who knows? As long it's okay for the market to go down, hopefully, I mean, as long as it's orderly, all right? In other words, people know that there's weakness coming, and so the market goes down in an orderly fashion, right? What you don't want to see is panic coming in. You know, selling begets selling, just like panic buying begets panic buying, all right? Panic selling begets panic selling. And so it destroys all types of charts and setups. And so that's why you really don't want to see that. But as the price goes on today, you might go through your portfolio and you're trying to get a grip on if the market were to drop, whatever, 2% today, or go up 2%, who's the best performer? Yeah. Who participated in the upside? And if the market went down, who participated the least in the downside, all right? So we're trying to, you'll remember yesterday we kept looking at, let's see what Chevron is doing. There you go. I mean, yeah, this is going to be interesting. Let's see what they're doing to oil. Now, I would point something out about spread traders. If you're if you're trading bull call spreads or bull put spreads or bear call spreads or bear put spreads, just remember that you're still trading directional, right? There's not much difference. Well, there is a difference, but there's not much difference between someone who's just 100 on the call side or 100% on the put side, right? By definition, when you say you're playing a bull call or bull put spread, you're bullish. You need, the stock has to go up, right? If you're playing a bear call or a bear put spread, you're bearish, right? And so it's, in my mind anyway, there's not that much difference between just I'm bullish, I have a call, or I'm bearish, I have a put. The major difference is one deteriorates slower than the other. So again, there's a rationale for trading spreads, and there's a rationale for just doing it straight directional. So as I'm pointing out here again, we want to look at those charts that are performing well or have performed well or have performed well literally in the last few days, because they will come back. Those are the ones that when the money comes out of those, they will also be the first stocks where the money comes back into. So that's why you want to have that. You want to have a good watch list to work with, and then you want to be able to look at them during the, over the course of the day or course of a week or so or 2 weeks, and you can get that feel for how strong they are or how weak they are. Interesting on Baba. Let's see, what do we have here? Baba, Baidu. Some of them taking bigger hits than others. What was that other one? JD. The market may not like being blindsided. It reacts swiftly, right, to something that it has heretofore failed to price in. That's why you get these overreactions, all right? A surprising negative news or a surprising bullish news, again, the market quickly, as you can see, quickly adjusts to what it has missed or ignored or whatever, right? And all of a sudden the market is surprised by this news and boom, it reacts that quickly. Second. Interestingly enough, look, U.S. Steel holding its own. This the stock that basically started everything way back when. We've got the retailers, Walmart anyway, the retailers as measured by Walmart sort of looks a lot like the energy sector. That sideways consolidation action, interesting. Facebook. Again, they're still, Bozo's still going in front of Congress. I think this is still a short. That's just my opinion. One second. Hmm. Um, okay, again, very quickly here, we'll get to the Dow. We're down 230 points. Look for a retest of the lows. I mean, I'm going to concentrate on the retest of the lows. That is to say, if they break the lows, and I'm, maybe I'm interested in the SPY at that point, but this is interesting. As I look at the YM chart here, this is again the futures for the Dow. Look, we did come down, and this downtrend line, if that's an accurate line, oh, wait a minute, I don't think it is. Hold on. That's about right. I mean, that would be nice if we can hold above this downtrend line, but in the end, as far as the S&P is concerned, the Dow is concerned, trend is still down. Not only is it still down, all we're seeing here is a series of higher lows, lower highs. And in my mind, anyway, I'm sort of looking at this action here as a descending triangle. Now, you're not going to play a descending triangle using weekly contracts, okay? You got to go out, buy some time here. You've got to allow, if you're playing it that way anyway, you'd have to allow for things to develop here. But still, one second. That's the YM futures, the ES. We're down 23 on the what other headline can we get that can shake this market up? Keeping in mind now, the only thing that could save this market today, well, I shouldn't say the only thing, but Mr. Powell's testimony here today, or speech today, is going to be pretty critical. And we'll wait for the reaction. Again, yesterday's action, the market was supposedly, anyway, reacting to the good economic numbers that our economy is having. Right? Today, again, we got a mixed jobs report. Could have been better, but it wasn't horrific. It wasn't bad. Right? And we'll see as the market develops here today. So here we go. 1 second. Use the SPY again. Is anybody tracking a particular stock here? I always like to watch what Apple's going to do initially here. One thing you make note of, no matter what chart we've looked at, most of the charts, almost easily 95% of the charts we've looked at so far, they are off the lows, off the morning lows. And at this point, see 929. So some of you, I know, are getting fed up with the volatility. And again, on the one hand, I am pointing out to you that we are experiencing extreme volatility, unprecedented volatility, in that if the market is topping out, we should see more deterioration in economic data that would just put us on a downward track, okay, a downward path towards a slowdown in business. But yet we're getting this mixed action. On top of that, the political nonsense. That increase in hourly earnings here that they're talking about, all right, I mean, that bodes well for for inflation, and I'm sure what's-his-name Powell will talk about that later today. Again, let's see what the market is reacting here. 1 second. Actually, I'm going to use a different chart. Oh, well, let's stay with this guy right here. SPY. Jeez. SPY. We're going to wait for morning high, morning low to develop. And in this case, what we're interested in here is our morning high, morning low going to go above the pre-market high. Here's our pre-market high. Okay. And here's our pre-market low. Our absolute pre-market low is last night's low, 261. And at this point here, these are 1-minute candles. And you can see here how tight they're going to be. 1 second here. When I mean tight, again, they're afraid to go first. Here's our morning high, morning low here. They're pretty tight. I can't see any reason why you'd want to be an aggressive buyer at this point. So at least my expectation would be, I mean, the market's going to do whatever it's going to do over and above and beside my expectation. So I could use that word all day long. Ultimately it doesn't mean much. I can't trade my expectation. I have to trade what ultimately is happening. If my expectation is bearish and the market decides to push up, and I'm here short-term trading it, I have to join it. So on this chart, keep in mind what you're watching here. Again, we're watching the action of the SPY. This chart, this lower right side chart, right? You'll see here, look, we are above volume weighted average price, the VWAP line. Okay? And these are 133 ticks per candle, 133 changes in price where a trade occurred on an uptick or a downtick. And here again, I can watch, excuse me, watch the level 2 action here. Remember, as I keep pointing out, your market action, market pricing, these are conditional orders. Everything that you see here, these are conditional buy orders, buy or sell. These are sell orders, these are buy orders. Multiply this column by 100. This column by 100, that's the number of shares. One second. Once again, I would have trouble trying to figure out why they would be willing to push this market up, all things considered. Again, they just had a big sell-off again overnight. But, lies the volatility. I mean, that's what volatility is all about. Volatility just means, uncertainty, if you will. That's the bottom line. And so until we get things more certain, if your job is preservation of capital, how are you going to trade it? You're going to trade what's happening right now? We're 5 minutes into the day. One second. They're going to take it up here to the pre-market high. And there's two things to consider here. I'll show you right here. I don't know how closely you can see this, but look, we are, here's yesterday's drop after the market. When that announcement first came out, right, and you could see it right here. So here's where the market dropped on the announcement that Trump was doing the doubling down aspect. And you could see here, price, these are 1 minute candles here. So price here for a few minutes, about 3 or 4, looks about 3 or 4 minutes, went sideways. That was the first where they about it for a minute. So over here on this side, if we're going to push higher, your test is going to be, I just pointed out. So here's that pre-market high. Look where it coincides with. Look. Whether you're using minute charts or 5 minute candles or 60-minute candles or daily candles, all right, what I just pointed out to you here is it's meaningful. It means that price action here at this price level, they had to give it some second thought. And ultimately, what did they decide? They decided this price was too high, and they kept selling it. Now, what are they going to do? Look on the right-hand side. Look at your 1 minute chart. You hit your pre-market. Here's part of the trouble. I mean, it's a little. You need to pay attention or be cautious here. The volume overnight is considerably less than the volume in the real world time. All right, you can see the volume here. Right, so you look at the level, right, but you have to also take it with a grain of salt because of the volume here. It's not like overwhelming volume. It does give you a taste, if you will. That's why the market does pay attention to it. We're watching price action here on the way up. It's running into a little resistance, and here's why. Doesn't look at this point. Now I'm going to get rid of this overnight stuff. Hold on. We are at yesterday afternoon's low of the day. Happens to coincide with last night's high of the evening. So let's see what they do here. Are they buying into the notion that Trump is bluffing on this thing? Is that what they're buying into? Let's see if we can find that out. Either way, and I'm speaking for myself here, as if this market were to continue to try to push higher here today, again, I'm going to be inclined to short into it. In the end, you know, whether that will be right or wrong, we'll see by the end of the day, and that's assuming I even do anything here. There was a time, there's no question about it, there was a time when I would play these days aggressively, right? And come to find out over time anyway, when you look back, look, I probably made as much as I've lost trying to play these big days. You're expecting big reversals, and you try to play it that way. And some of them will work out and some of them won't. And one thing I've learned is how to avoid stress. That's what I've learned. You avoid stress by avoiding big losses. Or another way to say that is what I keep saying, you let the other guy go first with his money. at the end of the day here, in a little bit of time, maybe by 10:30 or somewhere in there, right? I would think that they're going to pull back in price, right? And either we're going to make new lows, or price action is going to come back down to some level, and it'll try to pivot again. Right? At that point, I will have a higher low. I've got a low. I would have a higher low, and for me, the name of the game would be take the trade if I can get back above this high. You understand? Right? And I'll repeat, the name of the game here, I mean, at some point, you have to take the trade, you know, again, it goes with the territory, but you have to have some sort of rationale. You just don't want to throw darts at it. And that's not what we're here for. Second. So again, typically here, again, that bottom line of charts, this is the SPY, this is the one I'm interested in. Right? These are all the driving forces. All of this is what's having pressure up or down on my particular trade. So it doesn't matter, again, what I might be interested in. Let's just look at, again, some of our leadership stocks. Look at the banks. If you'll recall, remember the banks last night, one of the last charts we looked at last night was the banks. And I had pointed out, look at here, I pointed out, look, we got to break out on the banks, right? And, you know, so that was encouraging. And again, along comes the news, and this is the reaction. So it is interesting. I'm watching the VIX here. This is the VIX, VXN. That is the VIX for the NASDAQ stocks. Interesting. Actually pulling down. Whereas the VIX for the S&P 500 now look at this. I mean, what is interesting on the VIX as I'm watching this, yeah, the VIX is basically saying, wait a minute, don't be so quick to sell into this market. The bond market action is telling me sell. They're buying bonds. Again, this initial action on big days like this, you can get spun around pretty fast. And as I've just said 2 or 3 times already here today, the way you learn to survive in this business basically is learn to control your emotions on big big moving days or big news days. All right? And the only way you can really do that is you either stand aside and or you're already in the trade and it's going in your direction, or it was going against you and you had to make a decision and exit the trade. Look, it's not all that complicated, but I do understand and appreciate the angst, right, of, again, if you're new to this business, to this action, the angst that develops. You're trying to, you're about ready to risk some money here that you know darn well, in this market anyway, could go against you in a nanosecond, right? And at the same time, if you don't participate, you're not going to make any money. So you have to draw. Look, it does come down to this, and I want you to please write this on your desk, right? Carve it in. There has to be a willingness to be wrong, a willingness to lose on your part. Not a desire to lose, right? but a willingness to be wrong, or a willingness. Right? And so once the market goes against you, all right, you have to already know at what point, right, would the market have to move to tell you this is definitely wrong. You have to know that in advance before you take that trade, all right? That way, again, you're keeping your sensibilities, your rational thinking while you're watching the rest of the market do whatever it's doing. But please pay attention to that comment I made here. Otherwise, it can be a pretty frustrating career where you're riding high on emotion and angst every single day. That's not what trading's about. One second. Still watching the banks here. We do know, look, they're selling high yield junk bonds, selling junk bonds. If they were buying junk bonds, they would be saying, we want the risk. If they're buying junk bonds, they would be buying stock, but they're not. They're selling junk bonds. They're selling bank stocks. They're buying bonds. I don't care what the VIX is showing me right, well, I do care, but the point is that the VIX right now, I think, is not properly pricing things in, but it doesn't matter what I think. I just have to be aware that, in my opinion anyway, I should be seeing a higher VIX. And so maybe, maybe now that's starting to come back up, or maybe the talking heads are finished telling everybody don't worry about it. Who knows? One second. Financials and healthcare. Well, wait a minute, weren't they, we need the financials. And of all things, again, this is a Friday, right? And nothing gets resolved on a Friday. One second. If nothing else, whatever stock you might be working with here, it doesn't matter. One thing you should have all learned in the last 2 weeks, all right? Trend is important. It is significant, and you trade with that trend. The question then becomes, look, if Baba's been trending down for what, a month and a half or whatever it is now, right? Yeah, you can get in there and try to trade it to the upside, but the odds are with you if you short this thing at some point. I mean, the point here is, the point I'm trying to make, and it's not just Baba, it's any stock, it's, we're trying to put the odds in our favor. If the trend is down and I go long, look, it would have worked on this day. It would have worked on this day, would have worked on this day, would have worked on, at this point so far today, right? But again, trend is down. You want to trade with the trend. That's a basic rule. There's nothing wrong with doing that contrarian trade, but certainly that would be one of those trades where you have to say to yourself, well, I do have that willingness to lose, as John pointed out. I have to have that willingness to lose, and so I know I'm going contrarian, all right? And so one way to handle that is you're going to take a smaller size trade. You're not going to bet the ranch that Baba is all of a sudden going to run back up to $300. I'm watching the futures here. Whoops. Yeah. On in that, I mean, on the Dow. Look at the Dow stocks here. The Dow is trying to show some strength. To me, I think the futures market is screwing around with us. They suck us in, again, unless you're trading futures, but they suck you in during the daytime, and then of course at night they reverse whatever's going on. So, look, there's a lot of ways to play this market, but one thing you don't want to do is just fall for everything that's going on out there. Hold on. Let's look at the Dow here again. I'm going to use look at the candle action here on the Dow. This is the Dow futures. Was way down here this morning at 24,015. This thing is up 300 points from the lows anyway. We're down 96 from yesterday, but we're up 300 points from the lows. And in that sense, this market today has already moved 2%. So this is going to be day number 27 that we've had the Dow move 1% or more. Again, in the last, since January. One second. Oil is flat. Selling the dollar here, let's say here's the 8:30 reaction to the jobs report, 8:30. One second. Okay. They sell the dollar immediately at 8:30. They sell the dollar. Why do they sell it? Because that jobs report came in mixed instead of being very strong, all right, which you would have expected a stronger reaction in the dollar, all right? So then they had what looks like about 15 minutes here to figure it out. Oh, all of a sudden it does sort of look good, and look at the rest of the reaction. That jobs report in net, here's the combination. This is a combination of the jobs report and the trade war nonsense that the market knows will ultimately slow down the economy. It's a tough thing trying to figure this out when you don't have a clear trend. And clearly, when you look at the stock market right now, you don't have trend. We have no leadership and we have no trend. It's a lousy combination. One second here. Here's the Dow index itself. The Dow index itself, being down 300 points, all right, is now trying to show you a bullish looking candle. Look at this. Yeah. What we're seeing, interestingly enough, I don't know how much, I don't want to read too much into this, but this is the second day in a row, isn't it? Or third day in a row? We've dropped 500 points overnight, and the first thing we do is come back. Why are we coming back? Again, this is on the Dow anyway. One second. On the S&P. Coming back on the S&P. One second. If they manage to close this thing positive, to close it positive now, and maybe that's what the market's betting on. Maybe the market right now is betting on that Mr. Powell gives soothing words. Who knows? There's nothing here. See that comment right there? This is from Kudlow. There's nothing there that's endearing. No. I would. There's nothing here that is positive, in my opinion. Let's see if we can short this thing. Look at the SPY. What would I do on the SPY? Again, clean this up a bit. How many times do I have to save this thing? All right, look at the SPY. I'm going to want to pay attention to this once we come back under yesterday's low. Here on the SPY, this is yesterday's low. If I were taking it short here at this point, again, I'm looking here, 26475. If I'm willing to risk 30 cents or all the way up to here, maybe I could take this thing short at this point. Again, I'm speaking as a day trader here, not this is not a position trade or anything like that. One second. So here I do have my higher low. I'm going to be interested in breaking down trend line here. These are 1 minute candles. Yeah, 1 minute candles. I'm going to hold that thought. I'm watching the action in here, and I need to include here. 1 second here. All right, at this point, I just want to see today's action. So I'm going to change this up just a little bit. Time frame just for today. 1 minute candles just for today. The other thing I want to see is volume weighted average price. I'm going to add the study, VWAP, right there. Right, so now I'm tracking price actions relative to VWAP. I could use any number of triggers. Again, I am speaking as a day trader here. The behavior of the charts, all right, again, whether these are daily candles or 15-minute candles, that's what I want you to focus on. The fact that from a short-term perspective, it ends up being a day trade. But the point here is, look, what I really want to pay attention to here right now is that volume weighted average price. I really want to see that. Hold on. So this dotted line here, this is the volume weighted average price. This 264.35, you'll recall, was that pre-market price action. Hold on. So in the scheme of things here, if I'm looking to trade the SPY chart, all right, so again, I'm mentally, I'm bearish on this thing, obviously. So look, the first thing I just noticed here, price came down to this support level. It's bounced up. It's bouncing off the upper trend line, maybe as a trigger point, right? Because I don't want to sit here and guess at this. Maybe as a trigger point, I simply would say, you know something, I'll wait until the dotted line can be broken, that volume-weighted average price. If all of a sudden price action comes back below that dotted line, that volume-weighted average, I'm going to be interested in taking it short. Right? Where would my stop loss be? Stop loss would be right above me, wherever we came down from. But also, I guess as long as we're here, we'll also look SPY, SPY, SPY. SPY, SPY, SPY. That's slightly bearish. PC ratio, put the call ratio, slightly bearish. Remember, the fact that the VIX has above 20 or 19 or so, you know, that jacks up the price of all our options, all right? So again, we have sort of no choice in that matter, but again, it sort of underscores you want to be buying things when price action is quiet. Let's see, short. One thing, again, I would ask you to consider here or to notice, okay? I don't know how well you can tell or how well you know me, right? But most of you know me enough, you know, you can tell when I'm bearish, you can tell when I'm bullish, and you can tell when I'm frustrated, all right? And this morning, I'm bearishly frustrated. How's that? It's why I try to make it a point to make sure that when you're considering a trade now, again, an investment, it's, you know, you simply buy it and you hold it, right? I mean, but we're not investing here, we're trading. And to the extent that in order to do that, all right, again, you want to come as neutral as you can to this market, right? But it's the hardest thing in the world to do. And so, from my perspective anyway, if I want to participate, right, and I'm willing to participate, as I just pointed out, I've got that willingness to be wrong, right? But I'm not saying here be careless. That's I guess the point I'm trying to make. But this volatility, where everything comes down being based on how Trump feels on any given day, that is getting old. Right. We'll come back and see if that trade kicks in. 1 second. Get back to the chart. There you go. See, we're coming down to that trigger point. That trigger point being that 264. Now again, I could choose to have that as the trigger point only. At this point, look, going below here would take me below this is a 264.41. That's where the most of the volume came in today at that price level. Even though these are 1-minute candles, you can read these things and work with them accordingly. It's just that you can sometimes get whiplash of playing in these shorter term. Interestingly enough, look, the price action is holding up above the VWAP line. Now I'm surprised at that a little bit, and that's bullish as long as it stays up there. That's why I'm waiting for it. I would wait for price action to come back below here. And then I have to make another choice. Do I want to wait until it gets below 264? And if you're trading options, that 20 cents, 25 cent differential can make a difference. It just comes down to your sense of speculativeness. The other thing you want to be doing, of course, you already want to know literally what that would cost you, and so you should already be doing, you should already have calculated that using your options calculator here. And so this is free. If you've never used high volatility, that calculator here is free. But again, you can plug in exactly how much you're going to make or lose if price gets to a certain level. So this is incredibly useful. I always urge everybody to use it. One second. It is after 10. Let's see what that initial commentary was. Trend is down. That's all I know. And again, as a result, I'm more inclined to sell into strength. Here was the strength. We've had the strength going up. If I short it now at 264.29, am I willing to risk 60 cents of delta if it comes back to the morning high? That's the only question I need to answer. And that would be answered by doing a calculation in here. You can do it in here pretty fast. And but again, this is something that you would have already wanted to have done in the early going, and you're already knowing exactly how much it's going to cost you to be right or to be wrong. I mean, that's all we want to know here. If you've never used this, work with me on it, and I'll show you how to do it. I have no idea what these guys are talking about anymore. One second.
Once we deploy Workday, our finance and HR system will be 100%
this week number was entirely due to weather. We had great weather in the U.S. in February, so we got a big number of 200,000 gain in employment. And then, of course, there was a payback, no matter what the weather was like in March, but it turned out it was pretty bad. I mean, I don't know about you, but I looked through a couple of northeasters that really disrupted things. So weather probably shaved about 100K off the March number. So underlying job growth, abstracting from these weather effects, temporary ups and downs, is still over 200,000 per month, which is double the rate of the growth in the labor force. So
all right, so that's why your market is trying to push higher based on that jobs report. They're putting the spin on it that it was all about the weather. Who knows? Blaming the weather for everything, it's never worked before. So, but you just heard it live there. That is he right? I mean, I know this guy. He's explaining it as an economist would. So they're trying to put a positive spin on that jobs report. The volatility of the past 2 weeks is what I'm playing with anyway, and the fact that we can't break out of that's why yesterday's action was pretty encouraging. And along comes this news from Trump. I think the only thing that will save this market today, again, as I pointed out a couple of times already, will be Mr. Powell at 1:30. I believe that's his speak at 1:30. And quite frankly, I'm not sure I would be looking to hold anything over the weekend, but that's me. Speaking of that, what is coming up over the weekend, or next week, rather. We've got the jobs report, I think, for next week. Is it retail sales coming up next week? So week of April 9. Inflation. Retail sales comes up the following week, which is also the same as the earnings start coming out on April 18th. I just see a ton of volatility. That's what I see. Which again, if you're a short-term trader, you sort of invite that. You like it, all right? Why? Well, because that's what you want. You want price action to move. You don't want price action to just go sideways, all right? But what is frustrating to most people is, again, you do would like to have trend for a couple of days, 3 days, 4 days, right? And look, we had, in the last 3 days anyway, prior to today, we had 1, 2, 3 up days, 3 positive days. We looked like we were getting ready to break out. Maybe we were catching the beginning of a longer-term trend. So look, we just broke below here. In the end, I don't know that Mr. Powell will save the day, and I suspect maybe even some selling at the end of the day. Tough market. Anybody have any questions? Want to look at a particular chart? Okay. If you don't end up doing anything today, put your watch list together. Know what you do want to buy, and clearly you want to stick with techs and financials, but know what you do want to buy if and when this market can stabilize and maybe even move up. Right? Again, we still have no market leadership. That's important. If we had that market leadership now, all of this would be just a smidgen easier, but we don't. Okay, kids. I'll see you at 3 o'clock. Be good.